weekend, all. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this is for Friday, the 13th of September, Black Friday 2019. What do I mean by Black Friday? And remember, this weekend edition, we're going to cover one monthly chart and everything else is weekly. That's what makes them the weekend edition. Let me start off with what I mean by Black Friday. We have had what's called a crowded trades that have unwound. They're still unwinding, but they've unwound in a large part. You do remember 10 days ago when we were pushing 1.4 in the 10-year note. Well, that's now back up to about 1.8.5, 1.9. You do remember that the silver market was over $19 an ounce, a crowded trade. It's back to 1750s. I think it closed around 1756. In the gold market, we were $15.50. We've given back $55 in that market. In the copper market, you were down into the 250s, and the market has rallied dramatically. A lot of events have happened. This was a week where we saw, and we were waiting for the European Central Bank, but they weren't the event of the week. As it turns out, the event was that China and the U.S. have decided to step back from that line where they were just throwing tariffs at each other and tit for tat, and China has decided to go into the pork and bean business. They're buying U.S. pork and soybeans without tariffs on them. That's a big change. It's maybe a change in how the U.S.-Chinese negotiations that are going to go back on in October are going to work. Maybe instead of one grand deal, which I know President Trump wants, but it's probably easier to do this in steps and say, we've agreed to that with the end goal. We're going to get to trade. We're going to get to intellectual property. Let's first deal in the ag. Helps President Trump's base. China has got a big issue right now with African swine fever. They need pork. It's a staple. Prices have gone up nearly 50% in the past couple of months. They've lost half their hog herd. Maybe it's time that we get something done. They probably don't need all the beans that you think because they've had so many out of South America. Pork, whole different game, but it's a beginning. We then saw the European Central Bank decide to come in with the bazooka. I told you I thought they might do that. They are changing their monetary policy. They've gone back to where they should have been. They're back to QE. They're back to lowering negative rates even further. They're going to put in tier systems on the banks so that these negative rates don't impact the banks too much and hurt their reserves. There's more coming. The important part is we're seeing a change. This was an event weekend, a watershed, and I wrote about it in my reports last night. When we look at the monthly chart of the S&P, one market stands out in all these, one complex, the stock indices. They're the strongest of everything around. That fit in with what the Fed wanted too. They've been making these insurance cuts, cutting interest rates down, having traders put on risk on in certain markets. Some of that risk on got killed this week, metal markets, interest rates themselves, but it's all in a relative term. This market, you're finishing up right now at 30.0675 or in there. That's a new high close on the S&P. I know it may not be a new all-time high, but it's certainly a new high close that we've got on it on a monthly basis. On the weekly, we're not quite there. That's 30.24.5, and as you can see, the market is knocking right into that door. When we come to a weekly bar chart, you see the picture. We had come down, come back up, the next break low didn't take out the steps of the previous break lows, and the market's moving itself back into this resistance zone. What else do we have? We have an uptrend, as defined by how a swing line defines it, not me. We know that we can look at a chart and say the bias has been up, but then you get into these patterns where you get annihilated as the market corrects on you. In this case, we're making the higher lows, higher highs into a resistance zone. That's not that hard to see. The bias is up because you need a number, something to tell you is bias up or down. I define bias when you're under the 18-week average as being down, so it's a filter on other indicators I have, and it's up when prices are over that number. So I have it up. We haven't come back to the 100-week average since the beginning of this year, 2019. That's right where it hit. And the market's coming up. So where could resistance be? Possibility is the upper Bollinger Band. Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. A lot of pros look at it, be it a daily chart, weekly chart, interim. The first time you hit it is a resistance area, support area. Not necessarily a trend changer. Don't go by just because it hit it, you fell apart that time, it's always going to do that. And by the way, even when you hit it, you didn't break the pattern. You kept the higher lows, higher highs, what you were developing. Momentum is still pointing up. So as I view it, the S&P is still in an uptrend. If it wants to gallop and get going, the possibility is 30.6375. The 18-week average support is 29.24, let's call it. When we come to the NASDAQ, similar. You went and didn't quite hit the upper Bollinger Bands back here. You came down, I think you went right for it over here. Then you started this pattern of finally making a higher high last week, and you're following through this week. Again, momentum is up, the bias is up, possible resistance, 81.12 and a quarter. You got to 79.82. It is not the highest high that we've made in the market, which is 80.51, but we're knocking on the door. When we come to the Dow Jones, the highest high that we have on a weekly chart is 27,397. This week's close, 27,326. Again, you had big support at the Bollinger Band and the 100-week average. You fought a battle, and I'll take you back right here, at the 18-week average for almost 5-6 weeks. Then the market started lifting out, and as it turns out, the market's into a run again. Now, if it continues up, a possible target's the upper Bollinger Band, support back here, and even if you came down hard, you'd have layers of support under you. In the Russell, same thing. Now, the Russell's been a laggard. No ifs, ands, or buts. This has been the laggard market. It's finally decided, hey, Mom, don't leave the house without me. So the market's looking here. This was Friday, September 12th. Resistance still the 18-week up to the 100-week. You've had a pattern of lower highs, lower lows, but on this week you got to 1525.50, and the high back here was 1525.90. So you're still in the downtrend. Take that 25.90 out and you break the downtrend like in the other markets. There's a point where you break trends. You broke it. You went up, fought most of this week here, and today you had a nice rally to finish everything off. You know, the week ended up good. But again, China, very important to everything. Upper resistance, 1604, let's call it. In the VIX, the market has been slipping down. It's fighting a battle at the 18-week average. The trend down into a battle zone, trying to decide what to do next. Now, at the end of the day, we're at 9,700, which is over this, 9,300. I knew something was wrong there. 9,300, and the 18-week average is 92.83. So the swing line down, the bias up because you're over the 18-week average, momentum down. You've gone into a stall area on this, and that makes sense with the rally in the stock market. In the 10-year notes, this is when, and I know you're hearing this, we're going to 1% in the 10-year. I remember hearing it. I was on financial TV, and I'm going, I don't know, it's a little high. I mean, a little bit low, high for the futures. We never did do anything except we had a big reversal here last week, and this is the week where you got the follow through. Now, again, I believe the 18-week average is what I call that line in the sand. Markets like to go there to figure out what to do next. That's what I think is going on. You've left the uptrend. Uptrend in futures means lower yield. You've added yield back. How much yield does the market have to add back? You did the same thing in TLT, the popular ETF. If you take out 143.43, you break this pattern. It's what happened, and you're making a run for the 18-week average of closes, momentum down. I think the longs have abandoned their positions. That doesn't mean the shorts have taken over. Very big difference. In the dollar index, if you take a look at the dollar index, it's got a propensity to not stay over Bollinger Band tops. It went back to it, and that's when it always looks the most bullish, of course. Right here, it got thrown back this week from there. Now, it's still in an uptrend. It still has the pattern of higher lows, and certainly higher highs. Momentum is starting to deviate. It's starting to turn down. If the market breaks from here, I would think that it's going to then fight a battle, potentially. I don't know that it'll do it, at the 18-week average at the 97.35, 36 zone. In the eurocurrency, it's the flip-flop of the dollar. This market on a weekly chart has had a great problem staying under the lower Bollinger Band. Got to it popped back up, but you haven't broken the trend. You still have lower highs, lower lows. So we still have that dilemma. When we get to the Mexican peso, it's saying, hey, Congress, we're here. USMCA, right? US-Mexico-Canadian trade deal. It's up, but the Canadian dollar's been a bit weaker, and that is because Mr. Trudeau has by law to call an election. The polls have him tied with another person. It's only 5 weeks away, so it is stalling as the peso's going up because Mexico doesn't have that issue. They need to get the trade deal done. When we take a look at the yen, this is called a risk-off trade. Now, what's going on? You do remember everybody was getting nervous. Interest rates are falling. They're buying the yen. I wish I could explain to you why people decide the yen is a safe haven. Their banking policy is one of negative interest rates. Their economy's older. It's having trouble growing. It's doing a little better, but it's not like that. I think it just takes them out of that area. Well, now you've broken the pattern of the uptrend. You peaked out against the upper Bollinger Band, as you often do in that area. You're pulling back to the 18-week average now, but you're not trending. You have momentum down, the bias up. You stepped out of the higher low, higher high pattern. In Bitcoin, get under this number, you're in a downtrend potentially. Get over that number, back in an uptrend. You're nowhere right now. You're sitting there waiting to see what's going to happen. Then we get to the energy markets, where to a certain degree they got relief this week because you want to see the U.S.-Chinese trade deals get better. But when you dive into European numbers, you dive into Chinese numbers, they're not so good. And when you look at production, it's still up, but yet we had gotten to a differential between Brent and WTI of 377. We're back to 533, so Brent has added some premium. All that Brent did is go back to that line in the sand and not trending. Went up to a resistance point trying to figure out what to do next. What do you think WTI did? WTI got there too. It settled though, well under that number. The pattern has been up, but with the settlement under, puts the bias down. You're neutral in this market, and momentum's there. Then we get to the gasoline market, where the market has been under attack to the downside. And when we look at the numbers that we're seeing in the API and EIA data, we saw good draws in these markets. And in heating oil, well, notice the difference here. This market's trying to be in an upside as these other markets are down. Geez, do you think the market's starting to think about winter? I don't know. But I think that's probably part of it. And I wouldn't be surprised that you fight a battle at this 18-week average, but the trend is up, the bias is up, momentum is up. Resistance back at 201.60 to 203.50. I wouldn't be surprised to fight right there. And that's how you look at these. I start you off each morning, if you're interested, with this idea. I put out a subscriber video that is very different than all these. And I'm able to say, buy here, sell there, this is where I want you to have an order, do it at the market, do it at a price. I'm also going to say, and this is very important, this is where I think you got to be out. Do not come into this market. This is what I'm thinking. Why? Making a trade's the easiest thing in the world. Resisting one because you're getting caught up in the wrong things, that's it. Example, I get caught up sometimes. Who doesn't get caught up? You're reading, you're wondering, is this thing going to the moon or going to zero? Which way is it going? I cover 40 futures markets, 5 ETFs each morning, and I have those videos out for you ideally, and I really like to say I'm disciplined, by 7 a.m. Central Daylight Time. I want them in your hand before 7:30 a.m. I'd have to have a big computer screw up or I'm sick for it not to be. Now, if I'm on vacation, that's different. I'm going to put it out for you, but I'll probably put it out later in the day so I can sleep like a human being. to put these out, you don't just wake up and go to your computer. I get up at least an hour, 20 minutes before I even start recording. I read, I see what's going on in Asia for you. Now I'm telling you what I'm seeing there, what did I hear out of Europe, what are we looking for in the morning, then we review all this. The cost, it's not much. $7.95 for the first 30 days. Let's assume you don't like it. In the S&P, one tick covered almost 2 months of that, 3 months of that. Got it? A tick. What do you have to lose by looking at it? How do you find out? Go to us at www.iraepstein.com under the word education or research. You'll see Ira's morning subscriber video, all the facts, the questions, everything about it's there, and the sign up. I hope you do it. What keeps these shows going. Please click here. If you're watching us on YouTube, it'll take you right to that page. I'm Ira. You have a great weekend, and I'll see you all Monday.